Most IPOs dip, but there's a common bounce pattern smart for traders if you can simply wait for the continuation most of the time on day 3. On the third day after an IPO, and if you're new to trading, IPO is an initial public offering. That's when a company first goes from private to being traded on the public markets. But this can be one of your best shots to ride one of those first massive major moves and get you in position smart versus too early. So let's talk about it. So one of the most recent IPOs right now, CRCL and Circle. A lot of you guys might be familiar. Bitcoin finance play, massively successful IPO. And if you go back and look at the chart, it was a day 3 surge to an absolute T, okay? So first thing we want is a hotly anticipated IPO. Now, let me define, okay? There's a lot of initial public offerings. There's busy times, there's slower times, you know, when the market's selling off hard and there's not a lot of bullishness. A lot of people kind of delay their IPOs. I mean, think about it. If you're going public for the first time, you want as many people buying as many shares of your stock as possible. So when we go into kind of fear mode in the market, or there's some sort of geopolitical event going on, or maybe a Fed announcement coming up, you'll kind of see IPOs slow down. And then when the market gets more bullish, there's more appetite for risk, you'll get busy. You know, sometimes we'll go months with no IPOs, and then all of a sudden there's one every day. Now, going back to what I was saying, we want a hotly anticipated IPO. Like sometimes you'll just see, first thing that comes to mind is like, I don't know why it came to mind. I'm looking at a chair over there, a furniture IPO, okay? Like it might be a great company. They may make the greatest chairs in the world, but it's just not really something that people get excited about. So what we're looking for is obviously, I'm sure a lot of you guys know AI, okay? Quantum computing, CRCL, Bitcoin, as well as what I call like an alternative finance play. So not only are they exposed to crypto, but they're kind of trying to, you know, revolutionize banking. So crypto is one. You know, it's kind of been in the past, but just kind of for historical sake, you know, for a while, electric vehicles, like that we had EV IPOs, like it seemed like every day a couple of years ago. Not as hot now, but that's just kind of for historical context. You know, you think about, obviously EVs are still huge, but they're kind of mainstream now. You know, it's like a couple of years ago, you'd see an EV and be like, wow, look, an electric car. Now it's like they're everywhere. So it's not like there's this big anticipation. The industry has kind of reached maturity. So those are kind of the big ones that come to mind. You know, and then one more historical example, and I'll move on, but like the social media companies, you know, back when, you know, they were all going public, you know, now again today, obviously social media is a huge business, probably one of the biggest in the world, but it's just kind of mainstream. Everybody's got a social media account. It's like some new social media company comes along, it's like, oh, another one, you know, where if you could be in the hot sectors and the cutting edge, that's where, you know, people are looking for big growth, so they're going to be aggressive on those IPOs. So we want that hotly anticipated IPO. Now you might ask why or how, okay? This happens a lot when I talk about hot sectors and recognizing those, and same with hot IPOs. I got a simple solution for you. Just be in the markets, you know, be reading about the markets, you know, follow prominent, you know, trading related, finance related accounts on Twitter, you know, read the Wall Street Journal, read Barron's, read Business Week. And, you know, you're going to know they're going to be publishing articles about, hey, next week, this hotly anticipated IPO is coming out. So start there. Don't use this pattern or this strategy on a furniture company, okay? It's just not, it's kind of a waste of your time. So if you've ever traded an IPO, you know, day one, absolute chaos, okay? Absolute chaos. Now there's opportunity there. You can day trade them. Like to me, when it comes to trading IPOs on day one, only day trades. Now, let me explain further in the video why that is, or actually I'll do it right now, okay? What usually happens with a hotly contested IPO is it's priced, okay? So that's the price that the banks have decided this is our kind of anticipation for where we're going to sell the shares to raise the capital to go public. Now, like CRCL, if I recall properly, it was a couple weeks ago. I believe it was like 30. Now you can check me on that. If I'm wrong, roast me in the comments if you want. It was a few weeks ago, but I think it was right around 30. And what we look for is something that happened with CRCL is it opened at 60. Again, around there, roast me if you want. But it basically started trading significantly higher than it was expected to price at. So that tells us that there's a massive amount of demand for this IPO. Because if there was no demand, or I shouldn't say no demand, if there was limited demand, then the stock would have opened at 30 where it was anticipated to open. This thing opens at 60. Then you get the standard thing on day one. And bear with me, but it kind of looks like that, like all over the place. And if you've ever traded a day one IPO, you know they halt up, they halt down. Like it's chaos at the end of the day. Now, if you're an experienced day trader, you can trade that, but only day trade it, like quick in and outs. Use RCTs. Many of you are familiar with the RCT pattern. It's useful for day one IPOs. But for most of you, I'm just going to tell you, avoid all that chaos. Now, again, if you're a seasoned trader that can, follow a plan, be smart about entries and exits, fire away. But no offense to any of you, I'm guessing you're probably checking out the channel because you're new to trading or you're struggling. Like if you've got it all figured out, as much as I would love to have you here on the video, you're probably not watching this video, okay? This video is beginner and intermediate, I would consider. If you're advanced, probably not the video for you. That being said, you're new, you're struggling, you're trying to find a niche, you see these hot IPOs, what do? So you avoid day one. No day one. Then what you're going to see with most of these is reality kind of settles in on day two. Okay, day two, the chaos is over, the madness is over, and you're going to start to see kind of a return to reality, I would call it. And what you're going to see is instead of all of this chaos, you're just going to kind of see what I would call normal trading action. Okay, stocks go up, they go down, depending on if there's more buyers, there's more sellers. But if you notice in my drawing here, like the volatility really goes away. It's not the madness. The reality kind of returns and the stock starts trading more like, this is a real company, a huge company. It goes back to trading like it should on a normal day. Now that might be a trend up for 5% or a trend down for 5%, but it's back to reality. So typically we avoid on day two as well, because if there isn't any volatility, if there isn't any big moves, well, we don't want to trade it because there's no money to be made. Now the magic frequently happens on day three. And what happens is after that sideways consolidation area, you head into day three, and this applies day 4 too as well, but most of the time it's the third day or the fourth day. It's kind of after all of that chaos. Then what you're looking to do, and I know this might seem simple, but it works. You can look at CRCL, great example. We're simply waiting for the break of that day one high, okay? Now, I would use, at a minimum, a 5-minute candle to determine the day high. So if there's some crazy wick, like some wild print way up high, ignore that. I would use the top of the highest closed 5-minute candle. Now, notice I said at a minimum. I like to even use hourly candles on this. Now again, use what works for you, but I'm kind of looking for a sustained hour where the top was truly established. So again, at a minimum 5-minute candles, I like to use 1 hours because it's kind of more data. It's not, even though it's 5 minutes, it could just be a crazy wick within, or crazy move within that 5-minute period. So 1 hour body of the candle, not the wick, okay? So that would be our entry. So day one high, 60 min candle. And then these are IPOs So they've made big moves. You know, if you think of CRCL, it gapped up 50%, proceeded to go even higher. We're going to have to give a little bit wider risk on this one. So what we're using for our risk is the day 2 consolidation sideways zone. Because what's going to happen is if this stock breaks the day 1 high and breaks down below that, you're going to have all these day 1 people selling like crazy. So the odds of it continuing or even bouncing at that point is going to be very low, because you got to remember, a lot of people got shares at 30 bucks, and this thing's up in the 50s, 60s, 70s, 80s. So all these people that got shares on day 1, or even, you know, that were granted shares, they see that day 3 sell-off, they're probably going to be selling hard because they just want to lock in their profits. Looks like maybe it's a failed IPO. I'm not going to wait for it to hit 30. I'm just going to ring the register and move on. So it's a great stop level because we want to be out before all of that selling comes in. So now in this scenario, going to be a pretty wide risk, but all of you should be managing your position sizes based on your max acceptable loss, or what I call the number. Your number is always a dollar amount relative to the size of your account that you're comfortable losing. Now you might be brand new, might be 10 bucks. Maybe you got a little bigger account, it's 100 bucks, might be 1,000 bucks, might be 10,000 bucks. Maybe you won the lottery or got a trust fund from your parents, you might be risking $1 million. I don't know. But that number is a number that you're okay with losing. Then that number allows you to establish your position size. So maybe it's only 10 shares, or maybe it's only 100 shares, because you gotta, since the risk is wider, you're more likely to size down. But if you look at a stock like CRCL, just absolutely exploded. It's way higher. So because of that, you don't need a massive amount of shares. You could have a small position, if stock doubles, or we're still early in the CRCL IPO, who knows where it goes. You could have massive reward without having to have a crazy position size, which allows you to stay in the stock longer because you're not worried about it so much, because you don't have half your account or 3/4 of your account in this wild IPO. Don't be afraid to use smaller position sizes, widen your risk, but always be cognizant of your number so that you can lower the stress and stay in the stock if it continues for days, weeks, or years, okay? So, my friends, it's simple. Avoid day 1 unless you're an experienced day trader. Watch day 2. Wait for day 2, because that's when reality sets in and you can really get that pivot point where you can decide where the stock is still trending, to the upside, and where there's a good chance everyone's going to ring the register, and you don't want to be in that stock if everybody's selling. Then it allows you to map out a trade plan, watch your size. These hot IPOs have a ton of range, and when you got a ton of range, you don't need crazy size. So, in closing, have you traded any IPOs? Did you get smoked on day 1? Did you get sucked up in the hype, believe all of the mania? You buy it, it drops 30%, and then on day 3, it's way back to the highs. Like, I know a lot of people that experience that. Jump in on day 1, they get smoked, and then 2-3 days later, all of a sudden it's breaking out again, and they're like, man, if I would have just waited, I could have bought it later, and I'd be sitting on a profit instead of licking my wounds from a couple days ago. So, and then last point, in closing, if you're interested in breaking more of these patterns down, getting into more of the fundamentals of whether it be penny stocks or mid-price stocks or large cap stocks, short selling, going long, swing trading, day trading, crypto, etc., you can check out the Daily Income Trader System, where I go over it all every single trading day. Haven't missed a day in 10 years. That's how committed I am to my members. And if you're interested, hit that link below. Check out the Daily Income Trader System.